Great, welcome guys. Welcome to the pre-market overview, Friday, September 25th, 2020. Hope the markets have treated you well this week. Hope you've had a good week, ready for the weekend. Hopefully you've got a good one ahead of you. So today what we're going to go over is our newsletter from today. So the newsletter, you can email us, newsletter@tradewithufos.com. We will put you on that subscription list. Comes through every day, Monday to Friday, so you can have access to that for yourself. Now, we do the pre-market overview to just expand on the concepts that we go over in the newsletter for 15 to 20 minutes and just explain a little bit more how we came to those conclusions. So you can get the document for yourself and then join me if you'd like to get a little bit more background. So my name is Becky. Becky@tradewithufos.com is my email address. There's also support@tradewithufos.com. If you have any questions about what we cover, you can email either one of us, no problem. So for those that are joining from within the Tradewith channel, if you're already part of the fun, then obviously today being a Friday, just a reminder, you have your option session at 9 a.m. and futures at 1 p.m. today. So that's all Eastern time, so we'll see you in those sessions as well. Also at 4:15 p.m. Eastern, my colleague Boyan will be taking a look at what did happen today in the markets, what went as expected, what didn't. So that will be 4:15 p.m. if you'd like to join him too. And again, just a reminder, stocks and investing are Tuesdays and Thursdays, 9 a.m. and 1 p.m. respectively. And then sharpening sessions over the weekend, where you can take part in the psychology sessions and reinforcement sessions, where we're going to go over methodology and questions and answers, things like that. In terms of upcoming live courses, for those that want to learn concepts from the ground up, that's for if you're already part of the channel or not. If you might just think, oh, I need to learn how to trade futures, or I want to learn how to apply that methodology to stocks, or I've never looked at trading psychology before and I want to do that, whatever it is, then these are the classes that we do, the upcoming live courses. I'll show you in a sec how you can get to them. But the next one is futures September 26th to October 2nd, 10:30 a.m. So that's starting tomorrow. After that, we have the stocks class, then psychology, then trading plans, then backtesting. These are the live courses you can attend live, ask us questions. You have access, unlimited access to them, so you can continue to retake them as well. And of course, you have the recordings as well. So I'm just going to put the disclaimer up on the screen, so it'll come up there. I don't know what's happening. Sometimes it goes really slow. We don't have time to watch that come out. So instead, what I'm going to do is just type www.youcantrade.com. If you go to that website, you can get more disclosure information. In a nutshell, the disclosure information is telling you that this is educational advice. Sorry, this is educational content and not advice. Sorry, I should have said that properly. This is educational content and ideas, not advice. You need to understand there's a risk involved when you trade, and that you need to be aware that it is up to you to decide what you trade, how much money you put on it, and what you risk on it. You can go to the website to get more disclosure information, so that you don't have somebody saying it wrongly to you accidentally. Okay, so this is the place that you can go in order to get more information on what we do. So youcantrade.com, choose the Tradewith channel. You've got a free trial. You've got a call that you can schedule to get more information, and you can browse courses too. If you click on the browse courses, you can then choose course details on whichever one you want to learn more about it. You can then schedule a clarification call if you would like to speak to somebody before you decide on anything. If you have questions or whatever, you just put in your name and email address, the date and time that you would like to have that call, and then we will send you a link with information to have that call. Now, you can put questions ahead of time as well if you'd like to, if you want us to be more prepared with answers to those questions before we speak to you, or leave it blank, that bit's optional. Click request, you'll get a little pop-up to tell you that it has been done and to check your email for the link, and then we'll have a call with you so that we can answer any questions that you have before you start. Another reminder that we are on the App Store. So if you search on the App Store, You Can Trade, you will find us. We're not on Android at the moment, just the App Store. So if you have Apple products and want to follow us mobilely, you can do it that way. Okay, let's have a look at the newsletter. So this is what we send out every day on the right-hand side. The newsletter goes through 4 of the major markets in the world. We have the S&P, oil, gold, and the euro. 4 major markets, lots of orders move through it. So even if you don't trade these markets directly, they will most probably be correlated to or impact the markets that you do trade. We're going to look at a daily time frame for each. So of course, different things happen on different time frames, but we're using the daily here because it's probably the most commonly used time frame out there. Whether you're a long-term trader or long-term investor or a short-term trader, scalper, the daily chart does seem to come into what a lot of people are looking at every day. So for each market, we're going to go into a couple of things. So first thing is climate. Climate basically means which trend are we in, which market direction are we in? But more importantly, what are the probabilities associated with it? So we use our Auto Climate app that analyzes market data for us and tells us in the form of colored dots, the direction and the probabilities associated with the trend or the market environment. So if we see on the bottom here, this is the Auto Climate app. Ignore the lines, we're just looking at the dots for now, and we're looking at the colors of them. So it will show us one of three things. So we have thick blue dots, that tells us we're in a confirmed upwards climate, probability to the upside. We have thick red dots, confirmed downwards climate, probability to the downside, or a thin dot of either color. The thin dots, the color still tells us the direction, blue is up, red is down, but the thinness of the dot is Auto Climate app's way of telling us that we have less probabilities. And on days like that, we choose to do nothing. We don't want to be trading if we don't have probabilities on our side. So we're going to look at climate per market, so the direction and probabilities associated. We're also going to look at propagating. Propagating basically tells us how long can we expect to keep seeing that market direction continue. So on the right-hand side, this shows us what happens in these markets normally. So if we're in a downwards climate, how long would we normally go down for? If we're in an upwards climate, how long would we normally go up for based on amount of candles? And then on the left, we see how far we are now into that same move. So that from these two numbers, we can see, do we have probabilities of that market continuing to go up or down? Or are we more likely to be coming to the end of that move and therefore more likely to see a change in market direction? So that's what the propagating figures tell us. By the way, all the numbers here on the right-hand side, you'll notice they're all decimal places. Whatever the decimal place says, I'm going to round it up. So whatever the number is, basically add one, and that's the numbers that I'm going to use. What we're also going to look at is nearest UFOs. So UFO stands for unfilled order. It means where we expect there to be buy orders in a market that can push it up or sell orders in a market that can push it down. And we are using the Auto UFO app to highlight for us on a chart and show us visually where these stacks of orders are likely to be. If it's buy orders, it shows us as a green UFO. If it's sell orders, it will show us as a red UFO. So it's showing us on a chart where the probability is for price to turn. So we're going to look at each of these per market, and what we're also going to do is look at volatility. So volatility just means how far we expect price to move within given periods of time, or how quickly we expect it to move. So we look at current implied volatility first. These numbers are all percentages, and these refer to the expected movement up or down in 1 year as a percentage of its current value. We can then reverse engineer that and understand what that means per day in terms of expected movement up or down in a day, up or down in a week, or up or down in a month. So we can then get the expectation in terms of movement within these given periods of time. Now that shows us expected movement up or down. So the climate and propagating gives us a better idea as to which direction we're likely to see that happen for. Excuse me. And the nearest UFOs, as well as if we've come to the end of propagating. So excuse me, I've got something in my throat there. Show us where price might be likely to stop going in a particular direction and change direction and change where it's going. So we're using technology here to analyze market data for us and show us where the probabilities are more likely to be, making it easier for us to act. Now, just because something is probable doesn't mean it's definite. So of course we manage our risk just in case, and it doesn't mean that we're definitely just going to take a trade just because we have some probabilities. We'll look at other things as well, but overall we're not even going to do anything if these criteria do not show us that we have probabilities. So I'm going to go through it market by market, and we'll go through each of these concepts before we come down to understanding the news we have today that we need to be aware of. So we're going to start with the S&P. That's what we have here on the left-hand side. The S&P is the top 500 US stocks on the S&P index. We are looking at the SPX.X. That's the index used, also the symbol used for the index on TradeStation. So with the S&P, we have a thick red dot, confirmed downwards climate, probability to the downside. Usually, the S&P would go down for 4 candles, and we're on candle number 6, which means we lack probabilities of a continuous move to the downside. Now, when it comes to orders, We have a stack of buy orders all the way down here, 2955.45 to 2933.59. And we now have 3 stacks of sell orders above us. Now we just see here, if I maybe try and zoom in a bit to that. Here we go. So if we just see here, I've just zoomed into here. We've seen that these sell orders have already worked a little bit. Price came up into them, touched the sell orders, and has started to come back down again. It's reacted and come back down. That's what we expect sell orders to do, which is push price down. So in terms of orders, just put things back on the chart there as they were. In terms of orders, we have a lot of room to the downside with no buy orders to stop us, and we have sell orders close by that are already working to push price down. The closest number is 3295.75 to 3323.35. Now, so overall with the S&P, we have probabilities to the downside because we have a confirmed downwards climate and we have sell UFOs close by that are pushing price down. However, bear in mind, we lack the total amount of probability that we'd want because we have gone over what is normal in terms of the movement to the downside. So we have less probability of a continuous move down. So when it comes to the S&P, we would expect a movement up or down in 1 year of 29.27%, which means in a day, up or down of 0.60 points, in a week, up or down of 1.32 points, and in a month, up or down of 2.74 points. So that's the S&P. Let's move on to the next market, which is oil. At CL, that's the continuous futures contract there for oil. Okay, so for oil, we have a bit of indecision. We have thin dots here, thin blue dots. The blue is telling us that it's an upward climate. However, it's a thin dot, which basically tells us lack of probabilities, lack of real force or direction in that way. So again, we tend to keep away from markets like this anyway. Now, normally, oil would go up for 7 candles, and we're on candle number 2. So we do have probabilities of it continuing up based on what normally happens. But again, bear in mind the climate itself is unconfirmed. So no real probabilities there to either side, up or down. In terms of orders, we have a stack of buy orders here at 38.05 to 36.92. And we have our stack of sell orders here, 42.86 to 44.03. Now, again, we're kind of in the middle of both of these, not really close to either of them based on what normally happens in terms of movement in this market. So again, I would say we have no push either way, up or down, no probabilities either side. We will tend to keep away from markets like this. Now, with oil, we would expect a movement up or down in 1 year of 42.88%, which means up or down in 1 day of 1.09 points. Up or down in 1 week of 2.40 points, and up or down in 1 month of 4.99 points. So that's oil. Let's look at the next market, which is gold. At GC, continuous futures contract for gold. Let's just move price over a bit. There we go. So with gold, we see a thick red dot, confirmed downwards climate, probability to the downside. Usually, gold would go down for 3 candles, and we're on candle number 4. So we've gone past what's statistically likely in terms of a movement to the downside. Not to say we won't see that continue, we just lack probabilities of it continuing based on what normally happens. In terms of orders, we have buy orders just here, 1836.7 to 1825.9, and sell orders just above at 1907.6 to 1925.5. Now, again, we're kind of hovering here in between them. If we were to come down and hit this stack of buy orders, we would expect price to then go back up. If we were to go up and hit the stack of sell orders, we would expect price to then come back down. At the moment, doesn't look like it's that close to either one, but we have come to the end of, or we've gone past what is normal in terms of a movement to the downside. So I would expect if we do continue down and hit this buy order, for the fact that we would have ended a probable move to the downside and hit a stack of buy orders, we would have more probabilities of a move upwards. However, we have a confirmed downwards climate. So we have different variables here, sort of showing us different things playing off against each other. It'd be interesting to see which one of these wins. Whether or not we continue to push past what normally happens in terms of a move down because of the strength of the climate pushing down, or whether or not the fact that we've come to the end of that and the buy UFOs might change things for us and go against that climate. For me, I'll be keeping out of it. I don't want to get involved in that fight. But again, no probabilities really either way with gold at the moment. Now, when it comes to volatility with gold, we'd expect movement up or down in 1 year of 23.41%, which means in a day, up or down of 27.5 points, in a week up or down of 60.6 points, and in a month up or down of 126.2 points. So let's look at the last market, which is Euro US dollar. That's the spot Forex currency pair, Euro versus the US dollar. So let's just scooch that all together. There we go. So we can see all the numbers and all the UFOs. Brilliant. So on the bottom here, thick red dot, confirmed downwards climate, probability to the downside. Usually the euro would go down for 4 candles, and we're on candle number 4, meaning we have come to the end of what is usual for a move to the downside. And we've hit a stack of buy orders. Closest one there, 1.1597 to 1.1507. Closest stack of sell orders is here, 1.1772 to 1.1900 even. So with the euro, again, another interesting situation where we have a confirmed downwards climate, probability to the downside, but we've come to the end of what we would expect in terms of a move to the downside, and we've hit buy orders. So again, we have these two forces playing off against each other. We could end up breaking the buy orders and the climate continues and it pushes past what's normal, pushes through the buy orders, and we continue to see that strong move down. Or it may be that the buy orders and the fact that we've come to the end of what usually happens will override the climate and change it and push it upwards. We don't know. Again, two forces working against each other here. Interesting to see which one wins. Again, for me, I would be keeping out of that. In terms of movement up or down in 1 year, we would expect on the euro 7.87%, which means up or down in a day of 58 pips, up or down in a week of 127 pips, and up or down in a month of 265 pips. So again, the volatility numbers give us an idea what we can expect in terms of movement up or down within these given periods of time. We use the climate and propagating to tell us in which direction we're more likely to see that happen. And if we've gone over the propagating figures and we're close to nearer UFOs, then we have an idea of where price might change direction and go in a different way. So again, we're using technology, analyzing market data for us to make it easier for us to make decisions based on what's more probable to happen. Just because it's probable doesn't mean it's definite, so we will manage our risk just in case. But again, we are putting as many odds on our side as we can. So I'm going to come back here to the newsletter. I'm going to come down to the news as well. So we need to understand the direct forces of buying and selling. Of course we do. That's what moves price. There can be other factors as to what moves price. So we look at news as well. So we go to fxstreet.com/economic-calendar. We filter by high impact news and by US markets. So you can look at different criteria if you want to play about with the filters on that link, if you want to look at it for yourself. Now, this week, we've had high impact news come out every single day. All of that information so far has been speeches, so you can read the speeches. If it's data, if it's a number that can be reported, then what happens is that it would be filled into this actual column. So today, for example, today being Friday, September 25th, we have at 12:30 p.m. Eastern, we have 2 bits of news coming out that could have high impact. Once they come out, we're likely to see numbers in this actual column because we have over here expected numbers and previous numbers. So you will see at 12:30 p.m. or just after those numbers be filled in on there. So if you go to the link at that time, you'll be able to see what that report was. Again, we don't necessarily act on what the news or reports say. It's an indirect force. It's not buy and sell orders itself, but it does have an impact sometimes. So we just need to be aware of the fact that there may be some increased volatility around about 12:30 today. And again, interpret it as you will. If you want to act on it, that's part of your trade plan. That's fine. But if not, again, just be aware that it's coming. So that's everything in terms of what we're going to cover today. For those that want to join us and join our sessions so you can learn more about how we use this technology on different markets and in different scenarios, day trading, all the way to investing, you can join us at tradewithufos.com/you-can-trade. There's a free 14-day access, so you can try us out for a couple of weeks first, see if you like us. If you don't, no worries, just cancel the subscription. If you do, then at least you've had a good couple of weeks to really know that it suits you and that it works for you. In terms of classes, obviously the next class is the futures class, starts tomorrow. If you go to predictive.com/futures live, you'll learn more about it. And again, this is where we're going to show you how we use this methodology specifically on the futures markets. How do we use this technology? How do we apply it to futures? At the moment, you can register for any course and get an additional one for free. So it's a buy one, get one free situation, thanks to You Can Trade. So go to the website, see which markets we teach in, see which concepts we teach, see which classes we do. and put it together in such a way where you can make the most of that deal, essentially 2 for 1. If you have questions on anything, you can email us at support@tradective.com. Otherwise, if you're joining us from within Tradective already, we will see you in the sessions today, options, then futures, and the session that closes the day as well with Boyam 4:15 p.m. Hope you guys have a good weekend. I'll be back Monday morning for the overview then. Hope the last day of the week treats you well. Hope you have a great weekend, and I will see you on Monday. Take care, guys. Bye-bye.